Yo, sapat la. So, have you ever thought about real estate as an investment vehicle? Well, I have, and that's what I'm planning on doing next year in the summer of 2020. Now, I understand that real estate is not for everybody. We're all different with our own risk tolerance, and we all have different reasons why we make a particular investment. I can only speak for myself, so here are my 6 reasons why I'm planning on investing in real estate. First and foremost, I understand the model. It's pretty simple how it works, and I understand how money is made. So you find a good property and a good location, and with that comes expenses. So property tax, the utilities, insurance, and then I have to put money aside for when stuff breaks down or when the property is vacant. So if you have a maintenance issue or you have some repairs that you need to make, or if one of the tenants' lease is up and you can't find another tenant right away, it might take a couple of weeks or a couple of months. And so you need to have money in place to take care of the property while it's empty. I might want to hire somebody to take care of the issues and deal with the tenants directly. So I need to put money aside for a property manager. And finally, I have the loan that I borrowed to buy the property and the cost of that loan that I need to pay for. Now, the goal is to find a good tenant to put in a unit to pay rent that cover all these expenses. People will always need a place to live, so I won't have to worry about the real estate business going away anytime soon. And if it's a good property and it's a good location, then I also won't have to worry about not finding tenants. There's 4 different ways of making money in real estate. So the first one is cash flow. So after you pay all your expenses and your debt service, your mortgage, if you have something left over, that's your cash flow, that's your profit. That's the part that can accumulate over time to help you reach financial freedom. Now, you borrowed money to buy that property, but the profits, the cash flow is 100% yours. Now, the second one is the loan pay down. So let's say that you have a 30-year fixed mortgage. So every time that you make a payment, you pay both interest and principal. Now, that principal is equity that you gain month after month. Now, at the beginning, you'll mostly be paying interest, but over time, you will start paying more and more of that principal. Now, let's say that you bought a property for $400,000 and the property value never went up. So after you pay it off completely, the property is now yours, and now you're worth $400,000. Now at that point, you could sell the home if you want to, or you could get a line of credit on the home to get some or most of that money out. So buying a property can also be seen as a forced savings account. You keep putting money in it month after month, and after you pay it off, after the term of the loan, then you have a decent amount of money that's available to you. So third is tax benefits. So real estate has a lot of tax advantages, and a lot of your expenses are tax deductible. So all your operating expenses like utilities, insurance, property tax, property managers, supplies, so all the expenses that keeps the business making money, they're all tax deductible. Then you can deduct all the interest that you paid on the loan, not the principal, but all the interest. And then there's depreciation. So although properties usually appreciate in value over time, the IRS look at them like a depreciable asset. So you're able to deduct the value that you initially paid for the building, not the land, just the building, over 27 and a half years for a residential property. Now, I know he's probably not the first person to say it, but I heard Grant Cardone say it's not about how much money that you can make, it's about how much money that you could save. So taxes are our biggest expense. So anytime that we could find a way to reduce it, then we get to keep most of our money or all of our money. Now, the fourth way to make money in real estate, that's appreciation. Now, history has shown that over time, properties tend to go up in value. Now, it's not promised in the short term, but if you're planning on buying and holding for a long time, like 10, 20, 30 years, chances are the value of your property is gonna go up. Now, depending on where you live, depending on what market you're in, that increase in value could just be enough to keep up with inflation, or the increase could be significant. Now, that increase in equity is also 100% yours. Now, the third reason is why I want to invest in real estate, that's leverage. Now, not everybody usually have the amount of money to pay cash for a property, so they usually put a down payment and they finance the rest of it. Now, that's not a bad thing. So by not having all your money in the deal, now you're able to get a bigger return on your investment, and that's because 100% of the profit is yours. So for example, say that you bought a property cash for $100,000. Now say that the property value went up $10,000. So now the property is worth $110,000. So you just made $10,000, right? So when you calculate that, that's a 10% return on your investment. So you pay 100, you made 10, so that's a 10% return on your investment. Now, say that you put 20% down and the property went up in value by $10,000. Now that $10,000 represent 50% return because you only put in $20,000 and you made 10. So you just made a 50% return on your investment. And I think that's super powerful, right? Plus, say that you had $100,000 sitting in your account. So by just putting in 20% in that deal, you have $80,000 that's available in your bank account to deploy to other investment, whether that's real estate, stocks, or whatever you want. Now the fourth reason is in real estate, you have more control over the value of the property from the start. Now, unlike other type of investment in real estate, you're able to buy a property that's undervalued, do some renovations to it, do some repairs to it, make it look better, add additional space or fix up the paint or whatever you do to the home, you're able to increase the value significantly. Now let's use the same example as before. So you put 20% down on a $100,000 property. So that's $20,000. Say that you spent another $20,000 on remodeling the property. That could raise the value of the property to say $160,000. So you put in $40K at the beginning. Now the property is worth $160,000. Now it was originally worth $100K. You put 20 on it, that's $120. Now from the $120 to $160, that's a difference of 40 grand. You put in 40, you made 40. That's 100% return on your money. And it doesn't matter whether you put a down payment or you pay cash. If you're able to buy undervalue and you know what you're doing and you spend some money on remodeling and renovations, then there's opportunities for you to make a good amount of profit on your investment. Now my fifth reason is what I consider to be my competitive advantage. So that's my girlfriend. So she works for Guaranteed Rate, which is a mortgage company that's really big in Chicago. So she understands the process of getting a loan very well. She understands the process of closing on the property very well. She understands the financing part of a deal. Now, when we started talking about our plans and what we wanted to do for the future and what we wanted to invest in, it was a no-brainer for us to just go into real estate. She already works in that industry, and I really like that industry, so we thought, why not just do it?
Do it! Just do it!
Now my sixth and final reason is because I just really like the topic of real estate. So I used to always watch those HGTV shows, even though they're not completely real, but I always thought that real estate was super interesting. So learning about it doesn't feel like a drag, it doesn't feel like a pain, like I'm doing something that I don't want to do. I just like learning about it. So going to events, to real estate meetups and meeting up with other investors and seeing how they started and what they're doing right now is super interesting to me. Just walking properties with agent is really interesting to me. So I thought, why not use that interest? Why not use something that I like doing and just focus on that whenever I get off of work? So yeah, these are my 6 reasons why I want to invest in real estate next year. I hope that was helpful for you guys. So let me know down in the comments why you're investing in real estate if you are, or why I should not invest in real estate. What are your point of views about real estate? Leave them down below in the comments. Thank you guys so much for watching, and I'll see you next week. Peace. Now the fourth way that you make money in real estate, that's appreciation. The fourth way that you make money in real estate, that's appreciation. The fourth way that you make money in real estate, that's appreciation. Why does it sound weird? The fourth way that you make money in real estate, that's... Stop laughing. The fourth way that you make money in real estate, that's appreciation.
Why does it sound weird? Appreciation.